All right, y'all, back to work. Fantastic job today. Some beautiful range trades. If you watched last night's video, you know what I'm talking about. And now markets are grinding higher pretty much all afternoon this afternoon. Now, grinding markets, they tell us one thing. Bear traps are likely where the money is made tomorrow morning. In fact, I have two variations of bear traps on my radar for Wednesday. I'm going to cover those here tonight in the video. Entries, exits. By the time we're done tonight, we'll have an easy game plan to make some money tomorrow as well. So charts are ready. Enough of the intro. Let's go make some more moolah on what should be a fantastic Wednesday trading session. S&P SPY ready to go tonight. Oh, the Nasdaq triple Qs are always ready, aren't they? I have three clues on these charts tonight that are telling us where the money is made tomorrow morning. The first clue is right here on the hourly time frame. I like to use the hourly charts as an overall directional filter. And it's very easy to see right now, both the S&P and the Nasdaq are nothing but bullish right now overall on the higher time frame. That will give us our directional filter for tomorrow. I have two arguably more important clues though on some faster time frames, some tick charts. We're going to grab that in a moment. Before we do that though, let's check schedule for tomorrow. We do have Jerome Powell back on Capitol Hill testifying tomorrow morning. But remember, this is day number 2 of his 2-day testimony. So we don't expect Jay Powell to shake things up too badly tomorrow. I will be tuning in tomorrow morning and listening in, and we'll of course be watching that closely tomorrow morning in our trade room, but I wouldn't expect that to be the big market mover for tomorrow. We are definitely watching right now for more updates regarding that ceasefire between Israel and Iran. That's definitely something everyone is waiting for more information. And remember, that tax bill, they told us this week that next week, July 4th, is their deadline to pass that big, beautiful bill to the Senate. So we know more updates are coming on that as well. So we'll listen in to Jerome Powell tomorrow morning, but I'm really watching headlines right now. Tax bill, the big beautiful bill, the ceasefire, and of course all of the things going on in the geopolitics in the Middle East right now. Let's get back to our charts though, because it's good to know when the news is, but the money is made on the charts. I mentioned earlier, we can obviously see right now the buyers have control here on the hourly time frame. Remember though, we don't trade time charts in our trade room. Tick charts are so much easier for pattern recognition, making money with. And if you're watching right now for the first time, all the time frames are in the upper left-hand corner. That is a 7,000 tick chart. And that moving average right there, that's the only indicator we need to make consistent, repeatable profits. It's the 21 EMA. There are two, I think, even more important clues here on these tick charts right now. One clue is that range right there. We popped up into a range, and now we're breaking out of that trading range. Now we know whenever we see a range breakout, we know that breakout pullbacks are always on my radar. It's one key level for tomorrow. But I think the most important clue right now is we popped up and we're kind of grinding. Look at that separation off that moving average. Whenever markets grind like this, we start looking for basically bear traps underneath prior swings. Pop up, pull back, grind up, bear trap zone below that key we saw this morning around 10 o'clock Eastern time. So I got two levels on my charts right now, the breakout pullback zone and the bear trap zone. I would like to buy pullbacks in both of these zones, but the breakout pullback zone, that is definitely not nearly as desirable because we're not buying that low. I would much rather buy a much deeper pullback. So the breakout pullback zone and the bear trap zone, I'm going to use slightly different types of bear traps to time the entries on this. So for example, if all we see is a relatively shallow pullback inside that breakout pullback zone, I'm buying relatively high. We made a really big move the past couple days here. So I like the idea of buying the breakout pullback zone, but I have to use a very specific type of bear trap. If you're going to my free video class right now, we call these technical bear traps, right? So as we pull back here, I'm going to watch for the bears to come in and try to sell this. Let them try once, go higher. Let them try twice, and I want to get in underneath a prior swing. I can't emphasize how important this small detail is. I want to see higher highs and underneath prior swings. Be aware of this. It may run down, bounce up hard, and start running. I want to get in underneath prior swings, because underneath prior swings allow me to compensate for buying relatively high. Now, my favorite trade for tomorrow will be all the way back down below, in this case at that 09. We'll cover these levels again, the Nasdaq here, a bit later on in this video. I love that deeper pullback. Now, the problem is no longer buying high now. Now I can be a lot more aggressive. Now, as always, I'm not going to pick a bottom on this. I'm not going to blindly buy this area. In fact, by the way, I wouldn't complain at all if we took a pendulum swing all the way back down, really anywhere below the 09, all the way down to that, anywhere in that area down there is a prime candidate for a bear trap. Now, this bear trap, I can be a lot more aggressive on. As we pull back, I want to see bears try once. I want to see them try twice. Now, I would not argue at all with an entry below a prior swing, right? I would not be upset about that entry like that. But in this one though, I can now get a better risk reward ratio. I'm buying much lower. So in this scenario now, what I can do is wait for those bears to get short and then think about where their stops are. If you're caught short and get stopped out, you have to buy your way out here. These will oftentimes squeeze and run all the way back up and take out that high. So if I get a deeper pullback, let those bears try twice. We're always a higher high, bears once, bears twice. You'll learn that in our free video classes. That creates the initial entry on that bear trap. Now, where does the market want to go right now? It wants to go back up and take out that high. So now we look for separation off the moving average and we start adding to our winners. Guys, adding to your winners is the easiest way to turn a winning trade into a monster gain on the day. Now, the way you do this is look for separation. Look over there, like on those pullbacks right there. Those pullbacks, they don't pull back all the way to the moving average. Whenever I see the pullbacks are shallow and don't pull back all the way to that 21 EMA, that tells me now this is now ripe for an add-on. In our trade room, we call these bear traps and add-ons, right? We run lower, below prior swings, bear trap. And then as it runs higher, we get separation off the moving average. We're getting in below that low. A lot of examples of these inside the free video course. And again, the target is back up to retest that high. Now, here's a question for you. What if we don't get the bear trap down there? You know, for example, sometimes after such a big move like this, every once in a while, we'll see a nice big rug pull and there'll be so many buyers down here, it just whoop and runs right back up again. In other words, we may not get the chance here to trap the bears below that 21 and squeeze those stops up here. If it V bottoms off the low, I'll make a small adjustment. If it V bottoms, it almost always begins to grind higher. What I'll do is find a new trend line off the highs, pin it down at that low for a channel. Now watch closely. This is where the magic happens. I want to buy as low as I can because I'm not being given a chance to buy nice and low. I want to buy underneath prior swings. And the key is I want that first touch. The first test is the best test. Let me say in our trade room, first test, first touch off that channel and just below a prior swing. And of course, the target now is back up to retest the high. Now I've got one more variation of this deep pullback bear trap. Before we talk about that though, let's slow down for a couple of seconds because I know most folks watching right now, you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. Don't you worry though, I teach this entire system in my free trading classes. In fact, I have a ton of examples of V bottoms like this, bear traps, add-ons. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So I want to help you guys make money with this stuff. I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. You will laugh when you see how simple that technique is. More importantly though, I want to teach you all my 4 favorite entry setups so you can time better entries, make a lot more consistent profits. Guys, bottom line, if you're still missing the best entries each day, or if you've lost your confidence in your current trading strategy, what are you waiting for? Pause the video, hit that link that popped up right there, and watch that free trading course. You're going to love all the trade examples I include. I have a ton of trade examples of traps and add-ons all in that short video series. The best part is it's completely free for you. Also, too, guys, keep in mind too, I'm going to put all the important links you'll need to learn this strategy down below this video, the description of the YouTube video. Start first with the free video classes. Most folks start making money all on their own, all from that simple video course. It's all free on the website. Start there first. And don't forget too, I post a ton of charts and videos and mindset stuff on Twitter or X, as the kids call it these days. If you're on the X platform, give me a follow. I'll put all the details you'll need to learn more, hopefully earn a lot more because of it. All linked below the tonight description of this video. So now you know where to go if you're here for the first time right now, because I do look at things a bit differently here on this YouTube video. And I want to bring you guys up to speed with that free video course. Okay, where did we leave off? We talked about how a shallow pullback, although I like that area, requires a slight different technique, right? Buying under swings on a shallow pullback. We talked about how a deeper pullback gives me a better risk reward ratio. And because of that, I can be a lot more aggressive, right, on that. And also too, I can add to my winner as I make that run going higher. But here's a question though. Every once in a while, we'll see that nice strong run down. We'll get that bear trap down there, get that nice easy winning trade will pop up. But for whatever reason, every once in a while, we'll hold like the underbelly of that move like that and make one more leg going lower. I'm going to warn you right now, this will feel very scary to be a buyer. This will feel like a reversal, but don't forget the hourly time frame. The hourly chart is way bullish right now. And so anything that pulls back any further will likely be bought up. The most important thing though is anybody who sells on a breakout pullback like that, anyone who sells that area right there, where's their profit targets? Their targets are back at that low. So sellers up here become buyers down here. This is a horrible spot to be selling, which means good for us. It's a great place for a bear trap. Now on this one, I can be a lot more aggressive. Okay, retest trades. We call these retest trades in our trade room because basically, right, it runs lower, pops up, retests that low. Really anywhere at or below that low is a great place for a bear trap. And like before, I'm going to wait for a pullback to that 21 EMA. I'm not going to force the trade. I'm not going to waste my time looking for a divergence or using indicators. I like traps because again, if I can get these bears trapped in right here, these are rookies, right? These are not professional sellers at that low. Professional sellers are selling high, right? They're not selling low down here. If I can trap those rookies in right now, again, think about this. If you're caught short and you get stopped out, what happens? You buy your way out of that position. So anyone who sells up here, they're buyers down here. And then once those rookies get stopped out, the rookies become buyers as well. And these retest trades, this is what works so well. The reason why they work so well is because everyone's a buyer. Everyone's buying on that retest, right? So once the retest, we stop them out. And again, if there's one thing you learn from me, I hope it is add to your winners. Once I learned to add to my winning trades, it completely transformed my entire trading career. Retest trades. Remember this trade. Retest trades, one of our favorite trades every morning in our trade room. It retests that low, bear trap, add on, and promise me, leave a runner back up to retest the high. But I'm getting goosebumps just talking this stuff with you guys tonight here on this video. Okay, now we know some variations of 2 types of bear traps. But here's another very important question. What if we go sideways up here today? What if overnight, what if this thing starts chopping around, going sideways? How do we change our strategy if we go sideways in the range overnight? Now, believe me, these are even easier. These are more lucrative. A new range up here makes our job so much easier. Let me show you why over now on the Nasdaq here. Nasdaq's getting lonely over here. I see NQ. I'm coming for your triple Qs here over the Nasdaq right now. Again, don't forget, we like to use the hourly chart for just direction, right? Don't get into the weeds on this stuff, okay? I've learned this lesson many times before. Don't get too far into the weeds on the higher time frames. Just use the higher time frames just for direction. The lower time frames are going to tell us in that direction where to find the right entries, right? So don't get too far wrapped up in the analysis on the higher time frame. It's all about overall direction. Keep it simple. Now, I want to talk tick charts because that'll help us time the entries for tomorrow. Before we do that though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. I appreciate you guys tuning in and watching my videos here on this YouTube channel. So as always, thank you guys so much for all the likes, all the subs, all the ongoing support in the comment section below. Now I promise I'm done begging for likes here. It's YouTube. They made me do this here on YouTube. Let's dive into the tick charts here right now and get serious here with some entries, the Nasdaq for tomorrow. Again, very similar here on the NQ, you'll notice, right? There's that trading range. There's that breakout pullback. So nothing really special about, well, nothing different, I should say, on that one. Breakout pullback. But again, it pops up and kind of grinds and grinds and grinds like that. Again, anytime we see a grinding market like that, we know it's right below, in this case, it's that 51 3/4. And again, like on the S&P, I took that range, I measure above it, I measure below it. If you're taking my free video course right now, we call these pendulum swings, right? Symmetry above and below. So again, anything, really anything below that area right there, I love that area right now for that bear trap. Now, on the S&P chart, we talked about, quite simple, right? A shallow pullback. I want to look for entries underneath a prior swing, right? A deeper pullback. I've got my bear trap. I got my retest trade, right? My V bottom trade. So all the same variations we talked about earlier on the S&P can absolutely be applied here now on the Nasdaq as well. But now let's see if we get lucky. What if there's a range up here right now? Now, how would a range change the game plan here for us right now? Remember, ranges are magnets. There's two things you want to remember about ranges. Ranges are magnets and they love to rotate. Go back to that hourly time frame. We talked about this last night briefly, right? But think about this range right there. That was the range right there, right? The amount we go below, the amount we go above, the amount we go above, the amount we go below. We use these pendulum swings and we use these triangles, right? These triangles, rotation. Ranges love to rotate. It's so important we understand how ranges work. So if we understand that basic principle about how ranges work right now, this is why I said earlier, we'd be lucky to get a range up here right now, because if we go sideways in a range right now, what's going to happen? It's going to want to rotate back and forth, right? Using things like pendulum swings, using things like triangles, and most importantly, using previous ranges for breakout pullbacks. See, now, here's the best part. If I see a range up here tomorrow, and this may not be the range, by the way, it might be up higher here as well. This may not be the range, right? It might be a range a bit higher. I don't know exactly what the range will be right now. We'll know that more once we see more details overnight. But once we start seeing when that range will show up now that range, it anchors the market higher. Write that down. A range going higher, it anchors this market going higher. Because again, ranges are magnets, right? They're magnets. So if I have a range down here and I have a range up here, now think about, again, this is why I love range scenarios for tomorrow. Now that breakout pullback is not nearly as aggressive anymore. Now I can look for that straight up bear trap here, right? Bears once, bears twice. I'm using that breakout pullback zone off that previous range. We're going to look for those add-on trades as we rotate. Because now, where does the market now want to go? It doesn't just want to go back and retest the high up here. This is why ranges are more lucrative, right? Because now the amount below that range, the amount above that range will definitely take some profit off at the high of day, absolutely, but leave that runner, right? Leave that runner. If you know one thing about range markets, always leave that runner. This is why I love the idea of a range overnight. I know some folks get scared of ranges, but once you learn they work, you'll be like me. You'll wish every day was a range day. So we see a range overnight. And again, it might be here, it might be a bit higher. I don't know yet. But once we see the range develop, now we look for the breakout pullback off the previous range. We call these stacked ranges in our trade room. So breakout pullback previous range, bear trap, add on, and leave the runner to rotate on the side here. Now remember, that knife cuts both ways. So for example, if we see a range up here, don't forget, if we go higher first, okay, this is where things get a bit more scary. I would say they get more fun, but some folks say a bit more scary here. If we go higher first, we're way high up right now. Be prepared for a bull trap off that high or a fake out breakout off that high. Find off the, again, measure off the high, bring it down off that low. That will give you now your key support level. We're not going to blindly buy that area. What I'll do is I'm going to wait for a pullback to that moving average, bears once, bears twice, trap those bears in, squeeze those stops going higher. And again, as we are now running higher right now, I'm looking for that separation off the moving average, the higher high in price, and we're adding to our winner to compound our profits and make that run back up to take out the side of that trading range. So look for that range overnight. Remember, if it goes higher first, measure the amount above, pin down below, bear trap, add on, targets are always off at the side of that range, using that range rotation going higher here. This is why I said earlier, right? If we get a range up here, this one's even easier. And again, the same variations apply, right? The same variations apply. If we get a strong run down and whoop right back up again, that same V bottom, right? If it pops up and begins to grind going higher again, nothing changes. Again, that range above us is the magnet. Mark off that high, mark off that low, look left, find some prior swings, and as always, I want that first test off the low of that channel. I have a lot of examples of this in the free video course. I can use any of the entry patterns you guys are learning in the free video classes to buy the low of that channel. The key though is under a prior swing, first test is the best test. And again, right, we'll try to run this thing back up into that range and then mark up that pendulum swing, leave a target for you up overhead. All right, guys, boy, I'm getting excited for tomorrow. Hope you learned a bunch in tonight's video. That's the game plan, though, for tomorrow. Now, speaking of tomorrow morning, the place to be is in our trade room, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to learn and trade along every morning at the opening bell. As always, I'll put all the important links you need to learn the roadmap, start making consistent profits on your own. Start first on the free video course. Enjoy all those trade examples I include in that video series. Then come join me in the trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye for now.